Greetings everyone, JJ here from SchoolOfTrade.com, April 21st, 2010, a Wednesday morning. Hope you guys had a good time in our trade room this morning. Here's your live trade room recap. Before we talk about the trades we took today, we took a couple trades this morning for you guys here in the room. Had a pretty good day, lots of learning experiences this morning. I want to remind you guys about those three important links. If you're on the YouTube page right now watching a YouTube video, there are lots of important links in the description, guys. The description, which of course I believe now is below the video. Of course, three links. One is a track record. One for our 3-week trial, and the third link is for our blog. Our blog has lots of articles, lots of videos, and of course all open to guests as well. So if you guys aren't ready for lifetime membership, hit the blog up. Lots of good stuff to learn about on the blog. Let's take a look here. We took 4 total trades. Now we actually ended up moving to simulation here a little bit late in the morning. I'm going to talk more about that. Had the second losing day of the year here. Of course, we've had a great run in 2010. Took it on the chin this morning, though. Had 2 losses back-to-back, which caused me to move to simulation. We made the money back, even though it was in simulation, but not until after I did myself into a hole this morning. So we lost a little bit of money this morning. Hey, losses happen. It's how we react to those losses, right? So one of the things we did today, though, as you can see here, we're still well above $30,000 for the year so far. We're still well above $6,000 for the month so far. But the most important thing that happened today, guys, is we noticed right away this morning the ATR was dropping. And we're going to talk more about that in just a second. But first things first, this morning we opened up our charts, we went through our technical and our mental prep for the day ahead, and we immediately realized we were looking at a pretty different market than we expected to see today. Very narrow trading ranges, very slow price action, and it pretty much told us we better be careful today. Well, I took my first trade about 9:45, then waited till about 11 o'clock to take my second trade, and between that hour-and-a-half period, we really didn't see much happen at all. The first trade of the morning was a small loss, early exit, and then later on in the morning, we saw another similar pattern set up that was another small loss, so I had to move to my simulation. Now, as you guys know, my attitude is I will move to a sim account once I have 2 losses. And even more specifically, I need to be more specific with that. Those losses must be because either I am making the mistake or the market is simply not in a position to give us that move today. Okay, so there's 2 different types, 2 different reasons why I need to stop trading. They both use that maximum of 2 losses per day. Okay, so if I'm looking at a market that is clearly a difficult and challenging environment today, I have to be keeping a close eye on if I take 2 losses. Are these 2 losses because I made the wrong decision? If I made a wrong decision to get in the trade, I need to own up to that, and therefore I need to stop trading until I can start making better decisions. However, in this case today, it wasn't my bad decisions, it was just simply the market not giving us much to work with today. Great learning example today because, of course, we had 2 small losses, but those 2 small losses, as you guys know, quickly could snowball into a much bigger losing day if you let it. So it's important we realize that big difference. Is the market making it more difficult, or am I making it more difficult on myself? Today, the market was making it very difficult for us to really see anything getting going. So when I had those 2 losses, I decided to move to a simulator account to try to, of course, get my confidence back. Now, this is the lesson we learned today. Very important to acknowledge this, guys. We moved to a simulator account, and we, of course, took winning trades ever since. Even though we lost some money to begin the day, we still got our confidence back at the end of the morning, and that's the most important part of the pie. Let's keep moving. We'll show you guys what I'm talking about. Now, this was the first thing this morning. 8 o'clock this morning, we jumped into the market, open up our charts, we start looking around, what's going on? Well, here's an ATR chart right here on the crude, on the CL. A 2-minute chart of the average to range. You're going to notice here, notice how we had a nice strong move up, right? You can see that the actual ATR was rising into the early morning hours. However, when we look at the big picture, right, look up here, upper left-hand corner. Look at how much lower we are than we were yesterday. In fact, if you look at it here, you can see we're actually right at the low of yesterday's trading range. So even though it looks like we were rising in the short term, we were still very, very narrow and low trading range in the big picture. So don't be afraid to look back a couple days in the ATR. Take a look at it and see where are we in compared to where we were yesterday, not just where we were 10 minutes ago. Remember, the most effective way of using the ATR is a comparison tool. Are we rising or are we falling? Are we higher than we were half an hour ago, a day ago, a week ago, or are we lower than we were an hour ago, a day ago, a week ago, 10 minutes ago? Okay, so use that. That gave us the first red flag. Okay, this was the first heads up to be very careful today. And then, of course, once we took a couple trades this morning, we then realized, right, our assumption was true, and we needed to, of course, now take action to protect our capital. So difficult trading environment we expected to see. The first trade of the morning here was a slingshot trade on the gold. Now, if you guys are unfamiliar with the slingshot trade uses the wave indicator and this two-step on the scalp to, of course, short the two-step and look to capitalize, right? Cover that short trade at your trigger line on your wave indicator. Okay, we of course have all that detailed in the advanced course. Just scroll down, you can see the video there. Now this two-step, of course, right? So remember, the slingshot pattern uses the two-step pattern. So we're going to be trending up here. We bounce off the highs, right? Not seeing this thing break through here. If we would have taken the breaker pattern long. But instead, we marked up our swing low here, and we look for the break below that swing low, right? Counter trend trade. Well, this is all fine and dandy, obviously. We got into the trade, saw a bunch of sellers, momentum pointing down. Okay, but the problem is it soon curled and pointed back up. Now, this was just the tip of the iceberg today. So if you follow me down here, guys, below the entry here, okay, follow me down, you'll see momentum was pointing down, and then all of a sudden abruptly reversed and pointed back up. So when I saw the reversal happen like this, we see big buyers the tape, the speed picks up, momentum curls against me, and of course I know in that case to exit my trade early. So watching price action, watching momentum gave us the heads up. Get out of that trade while you still have your account intact. We took a -3 on the loss times 4 contracts is a -12. Okay, so that takes 12 ticks out of our account from yesterday. Okay, that was the first trade of the morning. Now again, that was the slingshot trade. A little bit higher risk, but it really should have worked out.